Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Thursday, April 11th, 2013. Let me first say that this is a midweek report back by popular request from some of the people who follow me because I was down to once a week. Now I've decided to do one more during the week, at least one more. So let's take a look at the S&Ps. They took off like a bat out of hell today. There was a pre-market announcement by the FOMC. Apparently, some of the information was leaked to congressmen, and they don't know whether they participated in the rally actually before, slightly before, like after the day's changes on Monday and Tuesday, or whether there's an investigation into it. Be that as it may, it was supposed to be released at 1 p.m. and it was released before the market. So most of what took place on the move up was let's see what this looks like here. This was the beginning of the day, so most of what happened during the daytime, let me see, if it started off here, it was about 1563. Hard to tell there. 1571. It was already up 9, so it actually kept on going. One of the things that I didn't want to show you was, obviously the market is strong. T4, 3, 2, and 1. The only thing that's different is 1, which I am using as a trading wave. This is still below 0 with the kickoff of the 5 o'clock session Central Time for the next day, the evening session. It's still below 0. This is like a minus 0.28, and so I have to stick with this and see what happens, because who the hell knows what's going to happen. This looks like a perfect scenario to keep going to the upside. I mean, it really does. My concern is a severe dilution of equity by Japan, and that means that Bernanke is going to have to follow through, and then the ECB will follow through again. And eventually, when it all comes to an end, it'll implode. Like I said in past videos, it's the only game in town right now, anywhere in the world. It's the biggest economy. Japan is the second or third largest economy, and they are completely diluting their the yen, which is actually one of the things I wanted to bring up right now. Here's a picture of the Aussie dollar, of the Aussie yen cross, and one of the things that I noticed in my last video update on Sunday night, I said that when even though the Aussie when the Aussie dollar is up, then that means I think I can put an arrow in this. Hang on. When the Aussie dollar is up, that means risk is on, and the Japanese, which means the yen is going way down. But so if I remember correctly, what I said was that there was a disconnect because the S&P was not moving up and this was moving up. So there was a disconnect between the Aussie dollar and the U.S. stock market, or the ES. So what I didn't take into account was, if you add the actual Aussie dollar by itself, without the yen attached to it, is really going sideways. There's no big move here. Well, I mean, you know, up and down, but it hasn't even reached its old highs yet. So in actuality, the yen, the Aussie dollar is kind of like a moderate risk on, but not as great as you would think if you were looking at um, the SPY. Whoops, signal. Let me see here. Okay, that's a completely different picture. The SPY. If you're looking at the Aussie yen, it kind of quit back here. The Australian dollar kind of quit back here, and this is what those three peaks looks like, and this is what this looks like. There has been a disconnect between the risk on that we saw in the risk on that's obviously taking place with the spiders and the S&P and the Dow is much greater than the Aussie dollar would imply. Much greater. So since it's been like correlation for a very long time between these markets moving up and down. This is a daily chart. So you have to ask, if there is a disconnect, how really bad is it? So the way I'm looking at this is that the disconnect is actually in place, and this will eventually just find its way down here, and so will the dollar. So will the S&P move down. Okay. Also, one other thing that I wanted to point out was the Aussie yen. If we put this up here, hang on 1 second. Okay, so the reason why it looks so severe on the chart of the Aussie dollar, of the Aussie yen going up so dramatically up here was, whoops, right here, of right here, where I thought it was actually a bigger disconnect than it was I kind of looked at this tape and I realized that these dark candles is the Aussie dollar crossing with the yen, and these lighter candles, high-low close, is the Aussie dollar by itself. So that in and of itself doesn't tell you the picture until you add, let's add the yen here. Okay, so the yen was so disconnected because of the $1.5 trillion infusion of QE capital to the banking system that's 1/3 the size of the United States. So it's like 3 times the capital infusion. So the disconnect was so severe here that it made this look like it was disconnecting even more, but it wasn't, because it was actually more contained. So I don't know if it's less confusing or more confusing, but that's how it looks. All right, so far, given all that information, it looks like everybody wants to throw some money. All the people who are saying that this market would never reach this high, including me, are finally putting money into the market, and they're, I don't know, they may be the basket, like Joe Granville in the 1970s used to say, somebody has to hold the bag at the top. So everybody else thinks it's going up. To my way of thinking, we could wake up tomorrow and this could look like this, and the next day could look like this. And I still think that's a real possibility. As long as it stays below 0 and it's minus 2.5 now, I have to be a skeptic. If this moves above 0, this actually could just like take off like a bat out of hell. So let's look at a 144 chart here. There's a 144-minute cash price, and that looks like it wants to go above zero on T1. 21-minute cash price. That's been above zero on T1 since 1545. So it is looking like it wants to roll over just a little bit here. I change the color on this. Hang on. And this is flattening out some, and these are flattening out. So basically, this will become a day trader's market, because even if it moves up 2%, do you really want to put in that much capital into the possibility of a 2% rise when against the possibility of a 10% drop? So all I'm saying is preserve what you have. Just move your stops. You know, you gotta move like this. Move your stops higher. Just pretend this is a daily chart. Just keep moving your stops up, or any kind of individual stock that you have. If you've booked this much, take some off the table or move your stops up. As this moves up, move your stops up. Maybe take a little bit off the table. So when it does reach that peak in here, wherever this is, you are not holding the bag. Let somebody else hold the bag. All right, let's take a look at some stocks here. Let's shrink this up a little bit. If you're day trading this, there were some nice moves in here. Let me see, 1597. Put you back about. This is about 8:30 this morning. Right about in here, and this was above zero all day long. So this is like a climb. And this is already above zero. It started quitting right here about 2 o'clock, and you see a little bit move down, then a little bit move up, then a little bit move down. So, and also on T3 the same thing. All right, let's take a look at some stocks like Goldman Sachs, which, whoops, wrong. Let's do a day trading one here. Okay, let's copy. This is like 2 days. A 610 on Goldman. Let's do a 144. All right, that looks better. Okay, so on Goldman Sachs on the left here, I actually had this short look like a short. T1, T2 was below zero. T3 was getting below zero. In fact, 1 day, 2 days, and that's usually a confirmation to the downside. Gotta admit, stopped me out, and I'm looking for. I am going to take another look at this because I like this stock. I like this stock on the downside here. It may come up to 150, 152.87. I mean 151.87, or it might just start rolling over a little bit. On the 21. On the 21 here, you can see that it moved above zero on T. Let me see, on T1, and then T2, and then T3, T4, and then T5. So it was a cascade, and this is like a absolutely perfect scenario from one wave to the next, to the next, to the next, to the next. It's a perfect scenario. If you were day trading it, like on the 610 or the one, let's see what the 144 looks like. Not a good one. Let's do the 610. If you were day trading, it's much like the 21. You can see this moves right here: T1, T2, T3. Right here in succession. And the only thing that indicate a bounce right here would have been the 89 period moving average. So I looked at this bounce and thought I'm just gonna short it right in here. And it worked for a little bit, and then it didn't. So, you know, you're not going to get every one of them. It's called trading. You got to bite the bullet and then do something else. So, the other thing that I did that I liked was, well, let's look at Apple for a second. Because Apple has been following this market up, but not that much. And Apple looks like it's, here's a 610 on Apple. Let's get the daily on here. This is, okay, so this is what happened with Apple today. And it's actually, T4 has been above zero for the last few days. Right in here, and then right in here, and then especially right in there, which was yesterday just before the close, which would have put it right in here at about 426. So it closed at 436 today. So it's good for 10 points. If you looked at the daily, it's going slightly above on T1 and T2, but if you look closer at the daily, all Apple has done for the last 10 or 15 points, it's slammed into its 21 period exponential moving average. So since it has a boost from the market, it may actually take off just a little bit more here. And I'm thinking if there's a follow through tomorrow in the market, I'm thinking of 1450 to 1455, and that may be a very, very good place to short it, because as far as Apple goes in the big picture, T4 and T5 are just below zero. Like, they're not. It's not going to come up anytime soon. If you look at a weekly chart of Apple, let's see if this will populate pretty quickly. If you look at a weekly chart in the last, okay, wow, I haven't looked at this for a while. Okay, on the weekly chart, we've come up to this 8-period exponential moving average crossing the 144 right here. Where this comes together and this comes together is powerful interchange. This Apple went down and then it came right up to that point. So wherever that line is, I'll look at it in a minute, but I did want to show you that T4 is now halfway below zero on a weekly. So the last time anything was below zero on a weekly on Apple was back in August of 2009 when the stock was selling for 164. So let's see what that upward number here. All right, well, it already hit it, came down through on a weekly basis. So 14, looks like I said 1450, but that means it would have to break through up here. And it already broke down through on the downside. I'm just thinking out loud here. It already took like one week down and then 2 weeks down for once for 40 for like 45 points. So this is kind of a nebulous retracement, considering that the stock market is at an all-time high. So I'm thinking that 444, like whatever the 8-period moving average on the weekly, 444, right in there, or make it 440 to 444 as right in between these two guys here. Okay, is the target upside price where you can take a short on Apple? Between 140 and 145, it's right now sitting at 135. That could happen on the opening tomorrow. All right, let's look at one more, and then we'll call it a night. Goldman Sachs. Oh, I'm sorry, we already looked at Goldman. NFLX. And look at the daily. And look at the 610 over here. All right, on the daily chart of on the daily on the left-hand side here. It had a bounce of several points. I'm not really sure how many. It was 63 to 70, like six points yesterday. 6-point bounce. And today it gave up 3.5. And after market hours, it's down. Here, let me check real quick. Yeah, it's down 40 cents after hours. Point is that market Dow's at a new point as a new all-time high. S&P's, the ES, and Netflix is bouncing between is lower. It already crossed the 8 and the 21 crossed right here, and a day later, or actually several days before that, T1 started to go below zero, and now it's all below zero, just the same day that the cross happened, and now T2 is below zero on the daily, and now they're both headed for the 50 period moving average, and it finished right at that average or slightly above. So it's sitting right on the 50, and you can see how important that 50 is, because for the last 1, 2, 3, 4, 5, 6 trading days, it bounced off here, same thing, kept bouncing off, kept hitting it, bouncing off. This bounced through the 8-period moving average, and then bounced off of that from the upside, and then came down, and it's right in between the 8 and the 55. So I'm looking for this to come down. If you're day trading, this is a wonderful stock to day trade. 3 days ago, when it was sitting on April 5th, when it was sitting up near 167, and you can see. Let me see. We're sitting up 167 when T3 was crossing, and then just you can either use the next one up or the same one here. So you're covering at like this is like one overnight trading, short swing trade, and it's good for 6 or 7 points, 8 points, and it's also very good for an options play. And then it swung up a little bit on T4, T3, T2, and let's move this chart out and see what happened. That was also a good trade because it got you in here and out here, which would have put you in at about 160 and gotten you out at about 168. Nice day trades. I mean, the stock is really moving. It's not dead like it used to be a long time ago when when this was happening. When it was like a nothing stock for months and months and months because it just went sideways and did nothing. And all the waves did nothing to go with it because there was no activity in the stock. So now we finally get some activity in it, and it's fun. I think these were like this went on from May through almost December of last year. So it was a boring stock, and now it's come to life. So it's fun to play, and it'll be fun to short this one. Either way, short or cover, go long. Anyway, that's all I have for tonight. Have a good evening, and I will see you at the next update. I'm going to do a 2-minute blurb on my services, so I will see you at the next update. Okay, for those of you who are listening for the first time, I have a concierge service called Triton Wave Consulting that if you want me to look at a stock, I will graph it or I will text you a buy or sell signal. These ways are being used all over the world right now. For the past 4 years, they were highlighted in Mastering the Trade, written by John Carter, and I'll leave this up for you to read. The fee structure is that if you want this in a video, I charge $300, and I'll deliver it as soon after trading hours are over because there are no videos during market hours. And also, if you want it texted or emailed to you instead of a video at night where you can take your time, but if you want a direct, immediate signal so you can buy or sell an option or a stock, the fee is $300 for that. And it's all processed through PayPal in advance. If you have any questions, just email me at tritonwaveguy@gmail.com, and you can read the rest of that. I'll leave that up. And I also wanted to make note of the fact that this was highlighted by the National Association of Day Traders. The Triton Waves were called the major new trading tool. I do private consulting for gold and silver for clients all over the world. Again, if you have any questions, you can email me at tritonwaveguy@gmail.com. Have a great evening, and I will see you at the next update.